Meanwhile, what's happening to developers and financial institutions? It's really a case of once bitten, twice shy. Financial institutions are increasingly becoming wary of lending to the real estate sector. But is it too little and a little too late? Have banks not done their homework well enough? Or have they not understood the risk of lending to different developers well enough? What's going on? Because we keep reading those figures of banks sitting on such a huge white elephant when it comes to the loans given to real estate. Mayura Mantri gets to the bottom of what went amiss when it comes to risk assessment.
Once bitten, twice shy. Financial institutions are increasingly becoming wary of lending to the real estate sector. But is it too little too late, as most lenders' large exposure to the real estate sector this year has yet again turned out to be a white elephant?
In my opinion, that kind of stems also from the way the markets have shaped up. There was tremendous opportunity that existed in the real estate markets. There were a lot of investors who were keen on capitalizing on these opportunities, and that really led them to maybe circumventing certain steps which they should not have.
At an RICS event held recently, lenders and market experts discussed the challenges that come with lending to real estate companies and methods used for risk assessment. Lack of transparency, standardized data and qualified professionals to make evaluations have made it difficult for lenders to correctly assess the risks associated with extending loans to different builders.
See, the fact of the matter is, if you look at the total outstanding debt of real estate developers today, at the is possibly about 50,000 crores. Right? I mean, the number could be little here or there. And the fact of the matter is, given the slowdown in sales that has happened, given the slowdown in the fact that obviously projects are not selling at the current price point, market hasn't really corrected itself, but there is a huge pressure in terms of managing the cash flows, and obviously that has an impact on the ability to repay.
Real estate companies without a prayer of repaying their debt are asking lenders and the Reserve Bank of India to roll over their loans to the next financial year. Whether the lenders and the regulator will give in to their pleas is the big question.
I think also the regulators and the RBI, the National Housing Bank are getting very strict about rollovers, because that's kind of evergreening a loan. Just because somebody can't pay, you give them you roll the loan over and you apparently clean your books. That's not real risk assessment. That's not real, Basel II or any of these the norms that you have. So I think increasingly the capacity or the ability of these banks to roll over loans is getting stifled in the correct manner by the regulators.
That's precisely the reason why Indian banks will have to get their act together and be far smarter when it comes to choosing the right developer and project to fund. After all, a bank funding a good project is also an important cue for the end buyer to choose the builder he or she can depend on to deliver. Mayura Mantri with camera person Deepak for NDTV.